Good morning. Let's review some of Friday's trades. And first, I'll talk about this is the Juneteenth. So the market was open from 9:30 until noon, or 9:30 until 1. And when you get days like this, like these half days, I just wouldn't trade them at all. So if you see one of these half day holidays coming up, like Martin Luther King days, another example, then just don't trade it at all. There's the volume's going to be off. It's going to be a different kind of day. So don't come in to these half holidays or really any holiday and try trading it. Just take the day off on those. On Friday, we had a really large gap up, and most of that gap ended up filling. So you can see today got pretty close, and I thought it would during this sell-off, although it was able to hold above it. But big gap up, bear bar with a doji bear bar. So there's a tail on the bottom. That's a fairly indecisive bar, right? So I'm not going to be making too many decisions off of seeing that after this big gap up like that. And you get two bull bars. What about buying above those bull bars? Well, I don't like how the first bar was this sideways bar. It increases the chances that we'll have less clear price action. And we're also really far from the moving average. All right, we got this huge gap up. Now we're getting these two bull bars. So I'd rather not be buying above those. I think it'd be a better buy if we only had two bull bars. But we have this first bar that was this doji bar, this bear doji bar. So it really weakens both sides. Really far off the moving average, you start to pull back. And for me, I don't see a trade on the 5-minute chart right during here. But if you see this and you're saying, well, I'm not really getting trades on the 5-minute chart, but I think it's going lower. Well, what you could do is look at a lower time frame and look for your same setup, but on a lower time frame. So instead of a 5-minute, you could do a 30 second or a 2000 tick chart, and then look for bearish entries. So if you think the market's going lower, then try to look for some sort of like a double top or something, and then on that lower time frame, you'll have a better chance of finding an entry. So like here, bull bar, bear bar, another bull bar. So this is creating a sort of a double top. And then you see it on the 5-minute, and then you can start to look for shorts on the lower time frame. So that's how I would go about doing that. So because a lot of the times you'll think the market's probably going to do this, but I'm not quite finding an entry. So but if you go down to a lower time frame, then you can look for entries there if you're pretty sure on the direction. Market tries to form a wedge here. 3 pushes down. So first, pull back second, pull back third. However, after going sideways here, so we had this big bear bar, then a bull bar, then another bear bar inside, and then a bull bar. We also haven't even closed this gap here yet. So at the time of this bull bar closing, this gap's still open. So with it going sideways here, and with this gap staying open, possibly it's an open reversal up. But with all that we've had, I'd rather not be trying to buy above this yet. If we could get one more test lower here and then another double bottom, then maybe the market would go higher. But here that's just buying too early. That's too aggressive for me. Market reverses back down, gets below the moving average, and like I was saying here on the 5-minute chart, there's not really an entry. I mean, maybe you could think about selling like below one of these bear bars. For me, I'd rather not do that. But I can tell at this point, yes, it's below the moving average and it's pulling back up to the moving average. That's what this tail is doing. So it's possible that it would end up double topping at the moving average. And I'll zoom in even more. So when this tail pulls back, it's possible that the market will find resistance at this level through here. All right, now we're below that level. We're below this. We're below the moving average. Possible it'll also create a double top here. So once again, instead of trying to trade the 5-minute, you could go down to a lower time frame and see if you see that double top on the lower time frame, and then you could try to get a swing trade out of that. So maybe risk like 3 points in here and try to get 6 points out of that. And so there's a lot of little things you can do during the day that are like this, even though you can't find the trade on your main chart. Couple legs up after these 3 bull bars, we'll probably get at least a little bit more up. So pull back, then a little bit more up. And these 2 bull bars, it looks like it's good to buy above there, but that is one concern, is that this might just be a second leg up within a larger bear trend. So when I see this bull bar, that's a good bull bar, but I'm not ready to buy yet. But then when I get a second bull bar, it increases the chances that I would buy. So I'll mark this with the disclaimer, this is more of a swing trade. All right, so if I'm buying here, I'm saying this is a wedge bottom. It's an opening reversal. The market will probably want to come back and test the open. If the market's going higher here, then that's what the target would be. So here's 2 times your risk, and I would probably put it a little bit more up to try to get closer to the opening price, because that would be the target. The bar is also a little bit large. I think it's 7.5 points right here. So if I'm buying, I'm probably not going to scalp. When I'm scalping, I usually like to risk less than 5 points, or maybe less than 6 points, so kind of around that area. But when I get up to like 7.5 like this, then that's a little bit much. So I'd rather trade smaller and then go for a swing trade, and then try to get up to the open. As the market pulls back, this is what I was thinking of as it was happening. I was thinking this might be a head and shoulder stop. Here's a left shoulder, head, and right shoulder. All right. So I was thinking this might be we're bearish. We have this reversal attempt that turns into a head and shoulders top, and the market might be heading back lower here. For me, the first time the market's going back below like this, so this is not a scalp for me. I'll need to see more of a double top here to try to scalp. But for swing traders, if someone's wanting to go for like 2 times the risk or so, which that'd be reasonable, after this head and shoulders top pattern, then what we have below is yesterday's open, and we also have 6,000 that's below. So when you're thinking about where would I get out if I take this short, well, that's about a perfect place for your target to be. So you'd sell there, and your profit target would be down around 6,000 and down around the open. So like I was saying, if I'm going to scalp, I would really want to see maybe a second bear bar here or a double top, and then try to sell below that. But when it's just his first touch of the moving average, it's the first time we're below the moving average here, and it's a first short, then the odds aren't as high. So that means it needs to be a swing trade, because you will need to get more profit to offset your lower odds of winning. So you might think, well, what about this being the double top you're talking about? At this point, it was starting to go a bit sideways, and that's really why I stayed out of all of these shorts right through here. So we've kind of been, we haven't really clearly been on one side of the moving average or the other. Like you can see through here, we were above the moving average. It touched it here. The moving average mattered here. Then we broke through it again. And then you see how the moving average held it here. The bars were trying to get below, it couldn't. Bars were trying to get above, but couldn't. But then here, now we're getting above it, then we're getting below it immediately, and we're kind of right in the middle of the moving average. So it's not as clear. I would rather see, in this case, if I got another bear bar here, then I'd look to short below that. But selling here below this first close below the moving average like that, I'd rather not, because you just get burned a lot on those first pushes back below the moving average. So you're either swing trading like this, or you're just not taking it at all. And so like this short and this short is for the same reason. But there is entry that I do like here, which is here. And like I was saying with this, how you should wait for a second bear bar. Well, here's that example. Here's your second bear bar. So, and what's going on here? You got the bulls trying to buy here. They're holding on. They're hoping the market will bounce and go higher. Here's the bounce. It really didn't go higher. So anyone that bought here, or they bought somewhere down here, you can see it never came back, and they were never able to even enter. Never able to exit their original position. So we have all these longs that are stuck in here. We've had, I don't know, 20 bars since these buys over here. So they've been sitting through all this. They're anxious, and they get a big bear bar, then they get a second bear bar. That's where they start to exit. I know if I was bought here and I was holding all through this, I'm looking at it's 2 hours later. I'm wanting to go ahead and make money, and it's not. And I realize at some point I'll probably have to exit. Well, here's that exit point. And what is the evidence that that's what happened? Well, look how this bar is almost the biggest bear bar of the day. I mean, we had a couple sizable ones here, but this is a really nice looking bar. It has a small tail on top, and it closed on its low. So this is a give up bar. It's a type of breakout bar. The bulls that bought here, they're giving up. They're selling. So you have sellers. You have bulls turning into sellers here. That's what creates this big bar, because they're all dumping their longs. So that's one way to study your chart, is look for these big bars like here or here. And what preceded it? Well, it was some sort of trap that was forming. So I like this for a scalp, and you have room to this prior low to be able to exit. So, selling here, try to go for a scalp of 5 points, and you still have room to get out before these lows. 5 bull bars up, 6 bars, 7 bars. Sometimes you have to use your imagination a little bit, and you can kind of develop your imagination and your creativity through more studying, more time in front of the charts, more studying of the charts. And by doing that, when you see a bar like this, that is, we've already had 5 bull bars up, and then we have not a bear bar here, and then another bull bar that's starting to close above the moving average. And it's not a strong bull bar, right? It's actually a weak signal bar, but it's the context that really matters here. Look at all the selling that happened here. We had 5 bear bars down, tight channel, pretty strong move down, and ultimately it did not get to 6,000. It did not get down to yesterday's open. It was actually, so this was actually a failed break below this prior low over here. It looked like it was going to race down and break through all this and go lower. Then it didn't. We got a bull bar and another bull bar and a third, and it kept going. And so the people that were shorting here, they get more and more concerned that this is not just going to collapse down, and then it actually might, in fact, reverse back up. Especially considering we were in this trading range for, half the day so far. We had a sell-off, but then basically from this point to here, we've been in a trading range. Another way to look at it is triangle. So I'm not sure if you guys had noticed that during the day, but so sell-off turns into a triangle. When you have a triangle, that first breakout, majority of the time fails, and the market needs to break out first and then pull back to the apex of the triangle right here. And then at that point, then to me, that's when you can start betting on the breakouts to occur. But when I see this triangle and I see this first move down, so this breakout might work. I think definitely shorting here, you can get enough, like I was saying, you have enough room to the low here. There is a trap going on, so there's definitely enough room to be able to get a scalp out of this short. But when you're looking at this whole breakout here, there's a pretty good chance it actually will be pulling back to the apex of the triangle. Majority of the time when you get these breakouts like this, they do fail and come back to the apex of the triangle. Then at that point, then once you touch the triangle, then you'll either reverse back down or reverse back up. So not only that, this point continues to be important. So it's no surprise to me that we came back right to that price later in the day here, bought back pretty aggressively to get to it, and then reverse back down instead of going higher. So be aware of these triangles, and then be mindful of that. Even like if tomorrow was a trading day, I would be mindful of this apex of the triangle, because it probably would continue to be important. But getting back to the point of what I was trying to make here with this, we had this breakout, and really this is a failed breakout of the triangle and of this low. So then when we start to see these bull bars trickling up, they're not all that large, but the bulls are winning on time. So the bears are hoping for their quick money here. They're hoping to short and for it to just go down, and they're getting dragged into this pullback that doesn't end. Then you get a close above the moving average like this, and like I was saying with your, you kind of develop imagination through studying the charts. And when I see something like this, and if you buy above, you'd be risking about not even about 2 points. So not even like 3 points. So you buy above here, go for 5 points, and you put a stop below, and you're basically just risking 2 points or 2.5 points on that. So you'd actually be turning that into a swing trade, even though you're just scalping. So you buy there, and you get your 5 points. And I like doing that because this is a trap. The bears here are trapped, and this is kind of the place that this isn't what your traditional teaching is. This is something that's contextual, and a lot of the times people will say you need a strong signal bar, and yes, but it's also context. The context outweighs the signal bar. So sometimes I like seeing a weak signal bar like this, because it feels like I have an advantage. It feels like other people are going to miss this, and because I understand the chart and understand like when a weak signal bar can be used, then I have that advantage, because people are going to miss that. The bears are trapped, bulls are buying, we're above the moving average. And then where are they going to exit? The bears are going to exit probably here. And in hindsight, we can look at this chart and say, yes, that's what happened. That's why this bar is so big. The bears that were shorting here, they exited, and the market rallied back to where, basically where it started, at the apex of this triangle. So what about buying this because of this bar? We've had all this bullish move. We haven't had a bar go below the prior low, since here. All right, every low has been higher. It's been stair stepping up. So what about buying here? Well, it is a good bull bar. We'll probably get a little bit more up after it, but I'd rather not be buying into the apex of this triangle like this. I'd rather not be buying into the 200 moving average. So, there's a couple things kind of that weaken this trade. Let's think about the people that did buy there. So they buy the close. So another thing that hurts buying here is, I feel like the bulls that had bought somewhere down here, or like the trade that I was talking about here, if you're buying anywhere through here and then you see this big bull bar, you're probably more likely to exit. Okay, so if I don't want to be the second buyer in this case. The first buyers were, I don't want to be the third buyer. The first buyer was down here. The second buyer was what we were doing here. And then here's the third buyer. The third buyer is coming in. They're saying, "Oh, finally it's clear. The market's going up. We have this big bull bars. It's, finally I can, it's clear what it's doing and I can make money." Well, actually, you are buying where, clearly someone that was able to buy down here and make money during this. I mean, clearly that would be like a very expert trader. So the expert traders are buying here. They're buying this trap here. And then where are they exiting? They're exiting after they get this gift bar of 10 or 11 points extra. So they're exiting, and then you're coming along and you're third, and you're then you're trying to buy where where the pros are really exiting. So they bought down here, they bought here. They see this is the apex of the triangle. They see this is the 200 moving average. This is the place to take profits. So you have all the experts taking profits here, and it's like the bug zapper. The beginners say, "Oh, it's finally doing this. Finally get a big bull bar, and I'll finally, then I can buy here." Well, actually, that's where people are taking profits. But let's say, as an exercise, let's say someone did buy this close. Like I was saying, we'll probably get a little bit more up. So it's, not the worst thing someone could do. It's not necessarily an illogical trade. If this is something, if you buy, you have to understand the context you're in, but you can probably manage your way out of it. So that's kind of how I'll state that. So if you buy this close, you get a bear bar. Okay, not the follow through you wanted. I don't think it's time to exit below that bear bar. I think some might. Some traders when they get, even if it's like, if they see bad follow through for just a couple seconds, if it's not doing what they want it to do, then they'll just exit. That's not how I trade. I usually get a little bit more room. So if I see this bull bar, I'll see, okay, bad follow through. It's not closing below its midpoint, so I'll probably hold on. And like I said, something some people would just exit there. They just they're more conservative, and they just say, I don't want any losses growing too large, so I'll just take the quick loss and move on. If I'm holding on here, so I don't sell below here, and I see this big bear bar, I probably would exit below that bear bar. So now we've had a big bull bar. We've already hit this, basically the apex target. And I see these two bad fall through bars. The market could be reversing back down, and I'd rather not be trying to hold on. So if I see this big bar, I'd probably exit below that. And yes, I know, so if I bought here to exit, I would need to short, and I'd be shorting right into the moving average. Yes, but when you see this big bull bar, it's supposed to keep on going up. It's kind of like, I'll find an example here. Like, I'm kind of just looking for, I don't know, maybe like this. So see a big bear bar. When you get something like that large, it's usually supposed to get a little bit more down. So something like this. And, when we're getting this kind of awkward fall through and it's not immediately going up, then it's probably just time to exit. So, buy here. If you can't get a scalp pretty quick, there's probably something wrong with it. So after 2 bars, that's where I would say something's probably wrong with it. So you move your stop up, bull bar. That's good. You haven't been stopped out because it didn't go below your bear bar here. Then look at the top of this bar. This tail, it did not come back to the close. So people that had bought here and disappointed, and if they were trying to exit at that close, they couldn't. So the bulls are still in this trade. The market did not come back. And like I was saying, you'd probably be stopped out below that if you moved your stop up. And the market just keeps getting lower and lower. The bulls that bought here, they get more and more disappointed. And at some point, they kind of all give up at the same time. And where is that give up? Well, we've had a close below the moving average here. We had a second close there. And then we had another close. So I'll mark these two bars here. You have this first close, and then I'm looking for the second bar, which is here. And then I think, so either of these bars would be okay to try to short below for a scalp. I think probably this is the best one. Now this is 3 closes. You can kind of tell from this that the bears are starting to gain strength. Like these 2 closes, they were kind of uncertain. Yes, we're below the moving average, but we're kind of right at it. And then here you get this third one. It's closing below the prior bar. The difference between this and this is this bar did not close below the prior low, but this one did. So that's a sign that the bears are really starting to gain some strength. And where does the market dump? It dumps right below this bar here. So once again, look for where the trap is occurring, and then try to enter during that trap. And once again, that's an easy, quick scalp that you can collect there. And that was already at 3 o'clock. So, after you start to see the market go sideways like this, and you're late in the day, then I would just forget about doing anything else. But I definitely wanted to point at that triangle. It's pretty clear. You have the high here, or you could maybe count it, the high here. Either way, you come to the same conclusion. Your lines are meeting somewhere right in here. Maybe you draw it like this, and then your apex would be right here, and that actually might be a more better touch, anyways. But there's a lot of little things like this that people need to learn, and if they're not getting these things, and they're going to be just kind of driving in the fog. That's something I talk about, and that's like the first section I talk about in the trading course is driving through the fog and how you manage driving through the fog. We all drive through the fog. You're in your car, it's foggy outside, you can't really see the road too well. That's something everyone deals with, even the very best of traders. But it's really about learning how to manage driving through it. You're never going to see all that clearly, but there's signs you can see, and you can kind of get used to driving through the fog. So knowing these things, it's going to take you a long way and kind of clear that up some for you. Okay, long video, almost 30 minutes now, so we'll go ahead and call it. Thank you guys for watching. Enjoy your weekend. If you have any questions, as always, reach out to me on the Discord or just leave a question in the comments and I'll get back to you. So see you guys next time.